Welcome back to the Dividend Diplomats YouTube channel, guys. It is Bert and Lanny, your favorite dividend investors here on YouTube. We are all making moves to get to financial freedom, saving money, buying dividend stocks that produces dividend income. We reinvest those dividends that adds more income, plus we receive dividend increases, which adds more forward income. We are all going to get there. But guys, we got three stocks to talk about today.
All right, let's do it. But before we do, subscribe to the channel. Give this video a thumbs up. Check out our shop because Laney and I both have the DD coffee mugs. It's a rare occurrence. It is a rare occurrence when we both have it. Usually I'm the one that forgets to bring the mug to the video. Laney's there. Oh, you're out. Yeah, I'm out too. I need some more
I
Joe.
got a little bit, but I can't really show it to you guys without spilling
Yeah,
it.
oh, there it is. Yeah, I'm in the same boat here. All right, we're not faking it, guys. We're not faking it. Like when we buy stock, we buy the stocks we're talking about. We share it. We also drink the coffee when we're sharing it too. These aren't just empty coffee mugs to sell merch. We use these mugs all the time.
Yeah, my sweatshirt's getting worn out. I might have to scoop me up another DD, crew neck, guys, which
Oh,
very comfortable. Highly recommend. Check out the spread
oh
shop
yeah.
below.
I like it. And if not, I have the hooded version. I might go with the crew neck next time if we
Nice.
re-swag
Drink
up.
a little bit.
All right, so what are we talking about today? We're going to run a certain sector through the numbers to see which one of the pretty big sector that everyone knows about, see how they perform and see which stock might be the best to buy right now.
The
Showing
best.
yes, the best. What sector are we talking about here, Lanny?
Guys, we're going into oil, your favorite thing to
Cool.
drink and brush your teeth with in the morning. So we're talking about oil. It's been a long time since we've talked about oil. I was looking at my portfolio composition myself. Bert, you probably could argue it the same as well. My concentration in energy slash oil is getting very small since we're adding so much more to other industries like healthcare, ETFs, REITs, transportation with UPS, food with Tyson. So oil is becoming a smaller portion of the portfolio. I don't know. Would you
Yeah,
agree, Bert?
I would agree, but that was done intentionally by design because I built up so much oil at the beginning, and then I kind of got a little frustrated personally dealing with the exposure to the swing in oil prices because we've had two major swings in the last 7 years where dividends have just been hard to predict in the sector. That said, though, I'm not against it at all. In fact, you should have oil as a component in your portfolio. It should be a part of there because they do produce strong dividend income. It's just one that I've let the allocation decrease by design. But to your point, it's always worth checking to see, is it time to add and nibble to this position? Because there are some fantastic oil stocks that can produce some great income for you.
To give everybody a little bit of sign and indication of where the price per barrel of oil is going. It's actually been, down definitely over the last 52 weeks. They hit kind of a high of near the 110 to 120 mark about a year plus ago. Obviously, way higher than where they were during the pandemic when, the barrel was pretty much at zero. You could argue that futures contracts were negative, yada, yada, yada. But they're now at $69 a barrel, which usually I always say above 40. I think Bert, you can agree above 40. Usually their oil companies are okay from a revenue and cash flow standpoint. So we're talking about Exxon Mobil today, Chevron, and we're going to talk about Royal Dutch Shell.
Beautiful. Promise. So we're going to run them through our screener, which features three metrics and a bonus metric. PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and then lastly, that dividend yield.
And guys, we're using stock prices as of the close of June 23rd, actually. So again, price changes could have happened between then and the release of this video, guys. But we're featuring all three stocks here. I think, Bert, you own all three, if I stand correct.
Yeah, we left out my other big one, BP. So they're sitting at home on this one. They didn't make the cut for this,
Sorry, BP.
but that's okay. So we're gonna run them through. Let's talk about them. Let's see, and then at the end we'll talk. Is one jumping out, or we'll just see maybe all of them are buys. Who knows? That's the beauty of running through this. You want to kick this off, Landon? Do we want to go stock by stock or
yeah, we're going to go stock by stock, guys. Let's talk about Exxon Mobil, ticker symbol XOM, the dividend aristocrat, soon to be dividend king. But they're trading at $102.40. And right now, analysts are projecting almost $10 in earnings per share at $9.89. This equates out to a PE ratio of 10.35. Now, when we get right into the dividend payout ratio, that was always the concern during the terrible oil downturn that we had during the pandemic, before the pandemic. But now the payout ratio has kind of been right sized a little bit. They pay at $3.64 on an annual basis, spread quarterly. Payout ratio is only about 37%.
Yeah, and why did that decrease? Just put that price per barrel chart right back up there. Revenue grew significantly in 2021 and 2022 as the price per barrel shot up. Earnings jumped up too. So a lot of earnings to go around for oil companies. So of course the payout ratio is going to drop.
Yeah. Dividend growth obviously has not been great at all for Exxon Mobil. So it has also helped the payout ratio stay low and, even, again, go lower when earnings are growing faster than they're growing the dividend. But they've been doing it for 40 years at an average rate of about 3%.
Yeah, and their yield right now, 3.55% too. So nice little premium compared to the S&P 500. We'll hold back judging based on once we see how it compares to the others. Also, though, their 5-year average yield is 4.95%. So their current yield is much lower than their historical average, which I actually think is pretty fascinating. So maybe there's some catch up to come in the future with the dividend growth. That's a logical conclusion, but we'll have to see. We'll have to see how 2023 plays out.
Down this year about 4%, up about 18% last 52 weeks. So that's Exxon Mobil, again, a 10 PE, under 37% payout ratio, 3% growth rate, 3.5+% dividend yield. We'll see. What does Chevron look like though, Burke? Because I know you own Chevron.
I do. 150, 135 is their price, 1377 for EPS. It's a PE ratio of 10.99.
Similar.
Yeah, very similar, right in the same neighborhood. Their dividend's $6.04. That gives a payout ratio of 43.86%, which falls right smack in that perfect payout ratio range of 40 to 60% here. Yeah. Let's fix those eyebrows because that's a perfect payout ratio if I've ever seen one there. What about that dividend growth, Laney?
19 years. They're on their way to being an aristocrat. And this is the best part about Chevron because I always thought, and Bird knows it, that's why Bird probably owns it, better composition from a balance sheet and how they earn. Their growth rate's 6%. So that's much better, 2 times what Exxon Mobil does. Again, doing it for over 19 years. And Bird, here comes the best part. What's that dividend yield look like for Chevron right now?
3.99%. So it's almost at 4. Almost at 4. Can't quite say it yet. It's 3.99. It's not 4% at the time of this video, but
it's a good compliment to the growth rate though.
Yes, very nice compliment and a nice little premium to Exxon Mobil there too. So it's right in line with their 5-year average. Their 5-year average is 4.32%. So you don't have that big disparity that you saw with Exxon Mobil. It's very tight for Chevron.
Down 13% this year. So down more than Exxon and up only about 5% in the last 52 weeks. So not quite as much as Exxon. It's almost like Exxon was just trying to catch up to what Chevron was doing because of how well Chevron's business was ran. But guys, a quick little summary here for Chevron: 11 PE, 44% payout ratio, almost 6% on the growth rate, almost 4% on the yield. Again, showing stronger metrics on the growth rate and yield with Chevron compared to Exxon.
Let's talk Royal Dutch Shell. Their price is $59.60, EPS $8.52. That's a PE ratio of 7. Lanny, you want to tell us about that payout ratio here?
Very low, guys. Again, I'm using about, I think, 66-ish on the dividend right now. So yeah, they're about 31% on the payout ratio, lower than the other 3 if you use that EPS. And again, Shell changed their ticker from RDS to SHEL. So getting data can be frustrating when that happens. So just an FYI there.
And it's international. So Laney's hit with a left and a right of ones that he hates. So it's just terrible. So, I mean, the data is interesting too with the dividend growth. They obviously cut their dividend. So now they're growing it back though, because they just announced that expected 15% dividend increase, which we talked about in our increase video on Tuesday. So they're bringing it back. So you have a huge increase coming. Shell's catching back up, but their dividend growth metrics look skewed because of it.
Yeah, and if you could argue that since now compared to when they cut it down to 32 cents, they've grown their dividend back by 34% or about 11% on average per year. So, again, the dividend growth rate of their rebound has been great, but when you have that severe cut, you're going to look negative right now.
It's a great earnings release right there. It's just written, it's just like, yeah, we didn't have the dividend cut. If you take out the dividend cut, our dividend growth is very strong. I love it. All right. So let's look at the yield. Their yield is 4.43%. So higher than Exxon and Chevron there. And again, it's hard to find the 5-year average yield, but we're just going to stick with the 4.43% increase. And how they've been performing, Lanny?
They're actually up, year to date comparatively that Exxon and Chevron are both down. They're up about 6.5%. I wonder if the 15% dividend increase, I don't think had anything really to do with it because I think the stock price has been trading pretty much flat since they announced that. They're also kind of in line with what Exxon's done over the last 52 weeks. They're up about 17%, whereas Exxon was up about 18%. So definitely performing better this year from owning a stock in 2023 and kind of on par with Exxon over the last 52 weeks.
Yeah, so there we have our three companies. We're going to put the chart up here so you can see what the three stocks are doing. Lanny, what is your gut reaction here? What are you doing with the three oil companies?
Exxon is just not, my wife owns the Exxon in her portfolio, not buying it right now just based on the big disparity with the 5-year average and just with not, I just can't. I don't know. Not that it's bad. Chevron, I think, looks great. If you own Chevron, we're not about to add Chevron to our portfolio, but I think if you can catch it over a 4 to 4.25% yield, I think it looks great. Shell, I feel like Shell has a lot of room to run. So yeah. I'm still not buying it right now.
No, I would agree. I'm right there with you. To me, Shell and BP always had the premium of the yield compared to Exxon, Chevron. There were always those two, and then they were the next two in the class right below it. But it plays out exactly how you'd expect it. So it's a good sector to keep a watch on, especially if prices decrease and yields jump. But you might find some great values here to keep building some great stocks.
Yeah, I do think you need to have, well over a 4% yield, even closer to 5% in this industry, just with the risk and the volatility because of the commodity of oil. What are you guys doing out there? All the viewers, are you buying big oil? What do you think of these three? If you were to buy one, which one are you buying? And are you buying any oil stocks right now? Let us know below in the comments, please.
And remember, if you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, if you're not with us, you're against us. Get out. Go.
Get out of here, guys, because that was Bird and Lanny from the Dividend Diplomats. Over and out.